Greetings everyone, Joseph James here from theschooloftrade.com. In today's video series, this is number 2 of the 5-part series of trade management. Now before we get started, let's recap where we left off so far. In the first video, we talked about the 3 phases of the move. We want to know how and why the markets move. And we identified these 3 phases of the move as having these 3 building blocks: the initial interest or the noise, the follow-through, and the exhaustion. So before we can talk about how to manage our trades, we first learned about what the overall structure of a move looks like. And we identified these 3 key building blocks: initial interest or noise, follow-through, and exhaustion. Now in the second part of this series, we'll talk about the emotions behind trade management. It's important that we understand the emotions behind trade management, and in the next video, we'll go over the actual method we use. So the first thing is, we want to look at the emotions and the emotional response that comes to our trading. And this, of course, is very important. One thing I think we all know is the secret to success is the ability to operate without fear, to execute with confidence even in the face of adversity. Right? A professional trader knows that times are tough in the market. You need to trade with confidence and without fear. Okay, very important. And that's obviously one of the biggest obstacles that new traders have to overcome. And that is, it's difficult to trade with consistency to build up that confidence to then be able to go into the market with no fear. So it's kind of a double-edged sword. So how do we get around the ability to, of course, gather up all the confidence we can and eliminate all the fear? So how do we do that? Well, before we talk about the solution, let's talk about the problem. Right? What is the emotional reaction to the market? In other words, when I get a profit target filled or a stop loss filled, what is the emotional reaction that I go through? Well, I think we all know when I get a profit target filled, I feel invincible, right? Feeling of euphoria. I'm happy. I get focused. I get momentum on my side, right? It kind of feels like the wind is at my back. I become fearless. So when I become fearless, when I get a profit target filled, the result is, right, the emotional response is, I'm now confident to enter the next opportunity. Very important thing there, guys. Every time I fill a profit target, I lose fear, I gain confidence, and I'm more likely now to jump into the next move that comes my way. Okay, so I'm not scared to get to the next trade. Now, if I see a stop loss filled, it's almost the exact opposite. We get angry, we get scared, overcautious, and fearful. So every time I see my stop filled, what is the result? That's right. I'm highly likely now to skip the next trade because I'm overcautious, analysis paralysis, and I'm likely to skip the next trade or at least cut the next winner short because of fear. So when I get a stop loss filled, I lose my confidence, and therefore I'm likely to miss the next trade. And as you can imagine, missing the next trade could mean making all that money back. And this is where the emotional response becomes compounded. We know our goal is this: hit more targets that will increase your confidence, it'll lessen the fear, which will make you produce better long-term results. But very difficult, because if you're seeing your stops filled, you're going to get down your luck, right? You start thinking the worst, you're filled with fear, you're overconscious, which means you're going to be likely now to repeat that same loss in the future or cut your winners short and let your losses run. So the emotional response is almost compounded on a stop loss getting filled, because not only do we lose money on the first trade, but now we're very likely now to mess up the second trade, either miss it or cut it short, which of course compounds that loss of capital from the initial stop loss. With a profit target filled, though, it gives us more confidence, which means we're going to be higher likelihood to get into that next trade with confidence, which means, again, it compounds again. We're now going to be more likely to continue to make money because we're now confident with our trading. So you can see the emotional response is compounded because the emotions we get are going to affect our ability to keep trading the rest of the morning. Now we're going to go over how we specifically manage these trades in the next video. In the next video, we'll show you guys just how important this emotional response is and how you can, of course, identify it and look to trade around it, right? Look to get around it. So now that we know what the emotional response is, now that we know how our mind is affected by the trades we see, we can now look to structure our trade management strategy based upon those emotions. So it's not good enough for me just to say, this is how I'm going to manage my trade. I first want to know, right, what are the emotional roadblocks that I have to overcome in order to be successful as a long-term trader. Well, here's how we're going to basically structure our trade management based upon what we've talked about already. First things first, quick targets. right? Nice first tight target. Your first target, we use a very tight target to increase the win percentage and build confidence. So that means that we're going to see more winners more often with quick targets. We also never want to let a winner turn into a loser. There's no better way to ensure confidence by taking fewer trades, right? Fewer losing trades, you say. Okay, so never let a winner turn into a loser. In fact, in my opinion, it's worse to have a winning trade turn into a losing trade than to take a losing trade right off the bat, because we literally watch the money slip through our fingers, right? That will really kill your confidence and really build up you some fear. So never let a winner turn into a loser. We also want to use very tight stops. Tight stops, they lower the risk per trade, which means, of course, you're going to keep more of the money you've worked hard to make already. So tight stops, very important. And then last but not least, making sure it's fully automated. We don't want to have any room for emotions or any thinking needed. So fully automate that trade management strategy. It'll be executed along with your order, and that way there's no room for emotions or thinking or impulses to get in the way. The last thing we want to do, of course, is to change the way in which we're managing our trades based upon what our emotions are telling us. So keep the emotions at bay and fully automate your trade management. So once again, quick targets to increase the win percentage, never let a winner turn into a loser, tight stops, lower the risk per trade, and of course make sure it's fully automated so there's no thinking and no emotions involved. Let's recap. So what we've talked about so far, we know the secret to trading is to trade with confidence and without fear. But that is obviously much easier said than done. We know that stops increase our fear and make it less likely I'm going to continue winning the rest of the day. Hitting our targets increases our confidence and makes us more likely to be confident taking the next trade. Of course, the goal being more targets and fewer stops. We then structure our trade management around the emotional response. So once we know what the emotional response is to each individual thing in the market, we then structure our trade management accordingly. Now in our next video, guys, in the third video of this 5-part series, we'll talk about the specifics behind our trade management method itself. Trust me, guys, you do not want to miss the rest of this video material. That'll be published next week, so don't miss the next video. We'll talk about our exact trade management method and how it applies to different markets, different patterns, and different situations. Guys, once again, my name is Joseph James. Hope the video's helped. Stay tuned for our next one. We'll talk about our trade management method, and we'll see you guys in the room on Monday morning, 7:45 a.m. Don't miss a tick. Bye-bye for now.